2023, the US housing market will be at a turning point, with divergent predictions for its future. Recent years have seen a major expansion of the housing industry, with property values reaching all-time highs due to historically low borrowing rates and high demand. On the other hand, worries of a housing market catastrophe have begun to emerge, with some analysts sounding the alarm that the US home market may be close to collapsing. In this video, we will examine the present situation of the housing market, examine the various triggers for a fall, and determine if a market crisis is likely to happen soon. Some real estate specialists predict a more balanced market with single-digit yearly growth, while others worry about a crash or collapse of the housing market in the near future. There is anxiety about an imminent recession in the nation as inflation is skyrocketing. The majority of real estate experts do not, however, think that the property market is in a bubble or that it is dangerous for the economy. The biggest financial catastrophe in recent memory was brought on by housing. When substandard mortgages fell apart, the country was left with foreclosures. Many brand new homes sat vacant, and suddenly millions of Americans were underwater. With the exception of the Great Depression of 1929, the housing market faced several obstacles throughout the previous century, but none of them contributed to the decline in property prices that occurred during the Great Recession of 2007. It's also crucial to remember that not all economic downturns have a negative impact on the housing market. During the 2001 recession, the housing market and demand remained strong despite the general economic slump. The housing industry has faced several significant obstacles over the past century, but other than the Great Depression of 1929, none of these difficulties have led to a decline in home values as great as that seen during the Great Recession of 2007. The latest pandemic boom in the housing market, with its increasing prices, bidding wars, and flood of investors, bears similarities to the earlier period. However, most real estate experts think that this time, the housing market won't collapse or cause a recession, and may even aid in the nation's recovery. Mortgage companies have taken action against loans that have grown significantly in size or that were designed to fail. Now, only buyers with reliable, continuous income are eligible for mortgages. When compared to subprime lending during the Great Recession of 2005-07, this has led to a noticeably lower risk. Lenders now impose more stringent standards on applicants, and the bulk of subpar mortgages have been terminated. With many more people attempting to buy and rent homes than there are available, the housing scarcity is too severe. In 2022, home price growth slowed down year over year as mortgage rates increased and housing affordability decreased. Home prices are expected to drop in the foreseeable future as long as mortgage rates stay high. The widespread unemployment that characterized the Great Recession is not expected, but experts do feel that if one does arise, it will be fairly brief. As a result, fewer homeowners will find themselves in financial difficulty, and those who do may decide to sell their properties for a profit. In instance, millennials are more likely to use the internet to locate a home they will eventually buy, and 92% of them work with real estate brokers to assist them, identifying the ideal property and negotiating the conditions of the deal. With 81% of younger millennial house purchasers doing so for the first time and just under half of old millennial buyers doing the same. The trend of younger generations buying homes for the first time is also on the increase. Additionally, during the previous year, the proportion of millennial vendors has increased from 22 to 26%. The choice to purchase or sell a property can be influenced by a variety of circumstances, but for all buyers under the age of 57, the primary motivator was the desire to own their own home. The top motivation for people aged 57 and older was the desire to relocate nearer to family and friends, which was followed by the need for a smaller residence. Although younger generations preferred to relocate closer to their current residences, the average buyer anticipated staying in their property for 12 years, down from 15 years the previous year. The projected lifespan was just 10 years for younger millennials and members of the silent generation, as opposed to 20 years for younger boomers. However, debt remains a major obstacle for many people trying to purchase a home. and both Generation X and younger boomers put off buying a home for the greatest period of time of any age group, 5 years, because of debt. With a median debt of $28,000, younger millennials had the greatest percentage of student debt at 45%. Despite these difficulties, the millennial generation's higher desire for housing acts as a safeguard against a meltdown in the housing market. With this tendency, the home market may stay steady even in difficult times as more members of the millennial generation approach the traditional first-time purchase age. Real estate companies and experts are having a tough time keeping up with the current state of the housing market, which is adjusting to record high inflation and higher interest rates. The continued pressure of these forces is making it difficult for those who make predictions about the future. What forecasts for the housing market crisis exist? Understanding the initial reasons why real estate markets decline is essential before providing a response to this topic. First and foremost, it's important to understand that property markets do not abruptly fall. A market will experience pressure from a number of factors throughout time, eventually leading to its collapse. A housing bubble develops when property values increase too quickly. It may rise when there's a desire and the ability to purchase. Competition raises prices when there aren't enough homes for sale to meet demand. The home market may fall if a housing bubble grows and pressure increases. A rise in interest rates slows the economy. Jobs and demand might decline. An oversupply encourages lower prices and a buyer's market. The housing market can then decline or stagnate. How can you know how bad it will be and how quickly things will improve? Depending on how well-rounded and serious the reasons are, and how sustainable development was before the downturn. There are still many issues with the housing market. Importantly, higher rates are deterring both potential sellers and new development, even though a shortage of supply has been one of the main factors driving up housing prices. As a result, there's little hope for a sustainable housing market or an improvement in housing supply, which would result from a rise in inventory. In 2023, the US housing market will be at a turning point, with divergent predictions for its future. While some economists predict a meltdown in the housing market, others see a more balanced market with single-digit yearly growth. Most real estate experts do not think that the market will fall or cause a recession, despite the fact that it is changing. To avoid a repetition of the Great Recession, the mortgage industry has taken action, and the bulk of subprime mortgages have been terminated. Most Americans want to avoid another 18 months of misery because the housing scarcity is too acute. The demand for housing from millennials and Generation Z is anticipated to stay high. There are no indications that the housing market will fall again in 2023, even if the demand may be declining and the pandemic-induced house bubble may be slowing down a bit. By that, we have come to the end of this video. Do like and subscribe to the channel for more interesting videos like this. Also, press the bell icon to get the latest updates from our channel. See you in our next video. Have a great day. Adios.